Hello everyone, this is Evan here from the Trade Risk on Wednesday, January 4th with a midweek market recap video. We are first going to cover the current market environment, move into the other major markets, sector analysis, and then finish off with some of those individual names that we all like to look at. Before we get into the video, I want to point out that I am hosting a webinar next Tuesday, January 10th. I would love to have you there. It's at 1 p.m. Eastern Time. I'll put a link up here in the top right-hand corner. It should be appearing any moment now to drop your email to sign up. It's entirely free. It's titled High Probability Swing Trading. We're going to focus a lot on market environment, market internals, some different tactics, techniques, and information that I use to sort of stack the odds with some of the swing trades that we put on here. So there's gonna be a lot of information, should be a good kind of fresh presentation. And that, once again, is January 10th. That's next Tuesday at 1 p.m. Eastern Time. You can go to the traderisk.com homepage and click this banner here, and that'll send you to drop your email there to sign up. So hope to see you guys there next week. And with that, let's jump into markets. So strong session today, S&P 500 finishing higher, a little over 0.5%, 65 basis points on the day. This is the second day higher, 2 days this year traded, 2 days higher. It's a good ratio so far. And we find ourselves again back to previous all-time highs. We're looking at the cash market, the SPX, because I do think, if you look at the SPY, you just have to realize once again, that dividend is still kind of holding effect on this chart right now, so it looks a little bit different, a little more sloppy. So I like to look at that cash market just to really see, okay, 2275 was the old high, 2276 was the old high, so we're almost there. You can see we almost tagged that this week, today's session. So you have this clear range that we've been in for most of December. We had the strong kind of run up throughout November and early December, and then we kind of tapered off and just consolidated into the end of the year. Notice we had this kind of you can call it a false breakdown, a check back to the 20 period, or just a standard kind of 3-day retracement down. But that was the low, that final closing day of 2016. And so far, we've continued to sort of power higher here early in the week, early in the year. So everything looks back, to being kind of rosy and good, constructive. We are trending higher on multiple time frames. Breadth is strong. So that means there's a lot of participation in the market right now, and there's plenty of sectors that are still kind of emerging from consolidations that could really pick up sort of the next leg and continue to fuel this market higher. So we'll cover that a little bit later. I don't think we're overextended. I don't think we've gone too far too fast. I think this looks very healthy. This is constructive. This is what you want to see. The lows so far have held. We are at a resistance point, so now we are interested to see, can the market just punch through these old highs? That'll be tomorrow's test. Or do we kind of roll back over, or at least just consolidate, chop around inside of today's range, inside of this range? That's what we're going to be interested in going forward. My bets are still to have long exposure right now. We did some buying yesterday. We did some more buying today. And we're going to continue to do so long as all of these sort of bullish factors continue to kind of come into play here. So SPX, again, levels are pretty clear. Last Friday's low is a good line in the sand. We're at the highs. Want to see if we can get new all-time highs tomorrow. That will be what we're paying attention to. If we go to the IWM, very similar situation, right? You have this nice, neat consolidation sideways. We're almost back to previous highs. We have the lows from last week, which is our good line in the sand right underneath 135. And we're looking at 138, 138.50 for that breakout level. So the IWM, very similar situation, had nice performance today, fueled probably a lot by those biotechs. We'll get into that later in the video, up 1.68% on the day. And the Qs perhaps don't look as good as the other indices, the Russell and the SPY, but they're still kind of hanging in there. They've recovered at the beginning of this year. Remember, we had this kind of 3-day shakeout that was a little bit more violent than the other major averages, and that broke us back into this old prior range that we were in for about 4 or 5 months or so. So there's a little bit of concern there. We wanted to see if the bulls needed to basically reclaim this 119.60, the top end of this range, very quickly if they wanted to kind of save ground here in the NASDAQ 100, and so far they've done that. It took 2 days, but we're already back above last Friday's highs, and we're kind of creeping back into this old smaller range up here. So constructive action doesn't look as ripe. It's not ready for a breakout just yet, but it did repair some damage. It's trying to stabilize back above the moving averages, back above resistance. So the Qs back into the clear, a little more neutral on those, but the SPY and IWM certainly look like they're ready to make some type of breakout attempts into the end of this week. Getting into some of the other major markets here, TLT continues to sort of just levitate higher. Yesterday was a pretty interesting day. It was a good test for TLT because we did open lower, and because we're in kind of a structural downtrend here in TLT, there's been a lot of momentum to the downside. This open lower after a 4-day rally with some topping tails, that could have been a good excuse to sort of roll over and come back down here and start making new lows or testing the old lows. But we saw a nice rally throughout the day in TLT, closing at the highs. We got that continuation today. That's constructive. There's a little mini kind of actionable signal there that tells me that there's still some strength here in TLT, that strength to bounce. So that is encouraging. Again, that can easily change, but for now, so far so good in TLT. That continues to sort of work itself higher. GLD, kind of a similar situation. It's just kind of floating higher here. Perhaps the majority of that panic selling or washout end of year selling is completed in GLD, and now it can try and rally higher. Notice this line here. This was kind of support back here in early to mid December. Broke down from there. We're trying to reclaim it now. So trying to battle above the 8 and 20, doing the constructive kind of initial work to potentially put in a bottom here in GLD. So that is constructive. Silver is very similar situation, trying to get back above that 8 and 20, trying to reclaim some important levels, prior support from late November. So silver, gold, TLT, all working themselves higher slowly but surely in this new year. And then finally, actually, if we go to USO next, yesterday was a day to take notice. Anytime you have a nice gap higher that marks the highs of the day and then continues to just sell off throughout the day and closes near the lows, and in this case engulfing about 5 days of price action, or maybe even more, that's something you want to take notice of. Clearly we didn't get any follow through from that today, so that's again just kind of telling a story of maybe indecision, a little bit of tug of war up here. There's not a whole lot of momentum now one way or the other. We're just kind of battling for control. We're still above the 8 and 20. The volume pattern looks good. I don't have volume on here on USO. The volume has looked constructive to the buy side in USO for the past several weeks now, so be interesting to see. Clearly just needs more time. It's kind of hands off for me. If we can start to clear these highs again at 1180, then all bets are kind of back on to the long side. I've liked USO. We've talked about the resiliency here. Yesterday was the first day that made me rethink that thesis, just given such a potent, large range day to the downside. But without the follow through today, maybe that's a one-day event. Maybe that's a shakeout. We'll have to see. Just needs more time, in my opinion. There's more quality, higher actionable setups out there right now, and the way I look at things. UNG, a brutal start to the year. 2 days down already 12%, and UNG had been a strong performer throughout 2016, and it closed the years near the highs, and then it came in this year, and everything seemed to be flipped on its head. So weekly chart, even dangerous now as it's below the 20-period EMA. Still a few days left in the trading week, so let's see if it can find its footing here at these prior lows from late December the 20th. But for now, this $8.15 mark, really need to see that hold. Otherwise, maybe back to the bottom end of this channel. Just again, a wait and see or an avoid in my book right now for natural gas. So with that, let's get into some of the other major markets, the sector analysis. IYR, let's start there. IYR has a pretty nice looking pattern here, as you can see outlined with this nice inverted head and shoulders. We're at resistance. We're at the October highs, and then recently most recently the December highs right around the 78.50 level, and you can see we're at that level right now. You got a nice formation here. If we can continue higher, if we can break this neckline, that bodes well for IYR going forward. So a nice little bottoming pattern there, potentially at play in the real estate ETF. Next, if we look at XLV, this has been on fire. We put out a little post on this today, specifically biotech, but healthcare has been equally as strong. If we go to IBB, you can see it's already cleared this December resistance here, right around this 275 level. So you can see we tried to bump up against this level, failed multiple times here throughout December. We cleared it today. It's up over 5%, I believe, on the year, close to it, 4.5% on the year, and it's clearing some resistance. So constructive for IBB. Maybe there's a nice flow that's going to start here, rotation into biotech now that we got the new year started. Yet to be seen, but so far it's off to a good start, starting to get some momentum. The MACD should cross over to the positive side there in IBB tomorrow. Financials also trying to come to life a little bit today, back to these previous highs. Looks a lot like the SPY that had nice run up, consolidated sideways. Now it's back to retesting those highs, so we'll see if XLF can cut through that prior resistance there. And the constructive side here is that there's still plenty of other sectors that are still consolidating and have consolidated in sort of a very healthy fashion. IYT, so this is the Dow Jones Transportation Average, still in this kind of downward channel here, consolidating once again, very healthy fashion. We've had a brilliant run up throughout November and early December. Now we're having a very methodical pullback here. And, if this can start to get going again above 165, you get a nice kind of continuation pattern to the upside in play. Again, speaking to what could kind of fuel this market for the next leg higher. XLI Industrials, very similar situation here. Strong run throughout November and December. They've been consolidating. If you can start to get a breakout above this trend line here, bodes well for the future. XLY also cyclicals, or the discretionary sector. Very similar, had a strong day today, up 1.3%. You can see it's already trying to break above that today. So get a lot of still energy here and a lot of rotational plays that can kind of happen. Biotech, again, has probably been doing a lot of work here early this year for gains, financials as well, and maybe even a little energy. But these other three big, the discretionary, industrials, transportation average, among others, could really start to step their game up here into the first few weeks of the year. So that is a look at some of the sectors. Let's talk about some individual names. We'll go to Apple first. Just kind of hanging out here. Hasn't done a whole lot wrong. Hasn't done maybe much right. It's just consolidating. It's in an uptrend here in the short term. It's got resistance above it. Support being carved out above this 115 level. I think the levels look pretty clear here. Doesn't look too actionable. Just looks like it wants some time to kind of slug sideways, so I'd give it that. Google continues to kind of play around here. It had this washout day to end the year, and we saw a strong snapback yesterday on Tuesday, up almost 2% on the day, and then a bit of a flat kind of uninspiring session here on Wednesday. You'd expect maybe to see some follow through off of yesterday's move. We didn't really get that, so not doing a whole lot wrong, but still just kind of consolidating, hanging out here. So something worth watching. I still like Google. I still think it can move. I just haven't seen that nice follow through kind of urgency that I really want to see happen here to take a trade in Google. Amazon continues to kind of move sideways here as well. Finished higher on the day. It's got to get above 760 support, prior support. If it can get back above 760, it can start to be back in the potentially breakout phase or at least upside phase. But for now, I still think you got to just respect the price action. You got to be a little cautious here until it reclaims the 8 and 20. I'd want to just avoid that and watch to see if it can do it. Facebook getting a little bit of an uptick. This has been more or less the underperformer in tech for most of December, and this one actually saw a bit of an uptick today, coming into maybe this trend line that's extended off those November highs. So getting back above 120, that would give it a new sort of breath of fresh sort of momentum if it can start to clear some of these recent highs. That's what I'd be paying attention to in Facebook. And then finally, Twitter had a nice little pop today, 2.5% to the upside. This chart still is pretty damaged here. 8 and 20 still kind of sharply lower. Clearly some support coming in here right around 16 and a quarter. So that is constructive. It's early innings of trying to stabilize, but a very important level for the bulls to hang on to right around the 16 level. Otherwise, Twitter is back to some troubled prices. So that'll be the wrap up for today. Once again, hope to see you guys on the webinar tomorrow. You can head to the traderisk.com, see it on the homepage, the link to sign up, or go to the traderisk.com/webinar. Thanks for watching the video, and I will talk to you guys soon.